Today, folks, I thought it'd be fun to share with you the top 6 stocks that the wife and I hold between our combined portfolios, breaking down the allocation of the exact dollar amounts between the ETFs and the individual stocks, how they overlap to break down the top 6 holdings that in fact make up 6 figures of value and over 20% of our combined portfolio. And before we can even get into that, so many of you have been reaming me out about all the news that I've been missing this week because it's been one hell of a week between earnings, crazy unalivings, and just meme coins. I get it. We're going to save most of it for the live stream on Sunday. I go live every Sunday at 9. You can join me, but we will do some housekeeping just to catch up a little bit as Canada's unemployment rate rises to 6.8%, raising odds of a jumbo interest rate cut. And this unemployment, rate isn't actually that big of a deal, but what is a big deal that's stirring concern in the market is actually the raising odds of a jumbo interest rate cut. If we continue to cut rates more aggressively than the Federal Reserve does, it's going to cause a big disconnect in the Canadian dollar value because people will take their Canadian dollars, they will go buy US dollars and put it in fixed assets in the United States. In fact, in just the anticipation of a higher interest rate cut against the US, people have already taken money out of the Canadian markets. I mean, the Canadian dollar's dropped by almost 1% just on that headline. Nothing's happened yet, but just the anticipation is causing a flux of people just flooding out of Canadian dollars. In fact, you can see it in direct currency investments like VFE. There's 2 investments you can buy, VFE and VOO. Both these are the exact same stock. They both represent the S&P 500, but one of them is converting to Canadian dollars within the stock price. And we can see year to date, VFV, the Canadian converted version, is up 36% against VOO that's only up 28%. This is why it's so important to diversify across currencies because you never know when your currency is going to underperform, and that really equates to much higher returns in your given native currency, right? And the reason that I'm saying that the jobless report is not that big of a deal is because the economy was fine back in 2015, 2017, and we're only just getting back to those levels of unemployment. Now, this is a concerning trend. We don't want to see it continue, but you have to recognize this is the same in the United States. Even though the jobless report is a little higher in Canada, in fact, the US is at about 4.2% right now, which is exactly where it was basically in 2017 as well. So we're both following kind of the same trend lines for unemployment. It's just the dollar and the interest rate cut cycle that's affecting everything. But putting that aside, guys, yes, we are in a clown market. It is a meme market where I'm trying not to do anything too degenerately because, everybody is looking at 5, 50, 100% gains in a week, starting to think they can do it. You just don't want to be the guy at the end of that cycle because eventually it comes to an end. And we know we're in that market when Haktua meme coin gets rug pulled. Somebody that's, just came into the market from a meme is now meme rug pulling people. Makes a lot of sense, right? We also got, unfortunate news with the unaliving of the CEO of United Health that caused the stock to drop 10% this week, a whopping $50 billion absorbed out of this market cap pretty quick. And this has a lot to do with what we're going to talk about more on Sunday, but you screw with people's money, it's one thing. You screw with their money and their family's health, their daughter's health, their wife's health. When United Health Group denies 1 in 3 insurance claims, it's honestly no surprise. And there's nothing nice. There's nothing joyous about seeing somebody get unalived. But when you see the social media reaction to it, I think it really shows the underlying problem and concern people have, with the healthcare system and where the flaws are in the United States insurance policies. And again, I'm going to leave it there. We'll touch more on it when we come to Sunday's live stream. But let's kind of round this out to what I'm doing with my portfolio. The stocks I bought is we continue to hit all-time highs, gearing closer to $360,000, which is mind-blowing, let alone where the wife and I, our combined portfolios are at. Just face-ripping rallies, and I'm not buying meme coins. I'm not buying insane high-flying stocks. I'm not doing anything too insane. And before we talk about the new stocks I bought, before we take a look at the TFSA, I will remind you, if you want full and utter clarity into the portfolios, you can come over to kylelivingston.com. The link is in the description below, and I've got a discounted course. It's not going to be discounted after the holidays. It's actually, the price is going to go up a lot. I'm going to raise it pretty dramatically because I give you guys too much. I'm going to show you the exact values of the wife and I's portfolio, how I manage my parents' portfolio, how I make my money so much. There's so much clarity that I will not share on this YouTube channel you can get from this course down below. You get lifetime access to. It's pretty cheap, guys. But let's get into it with the number 1 largest stock in our combined portfolios, and that in fact is Apple. I didn't think this was the case. I always thought it was Meta, but because Apple is so upperweighted in VOO is a huge position in our combined portfolios. Plus, the wife holds some individual Apple stock. Combining that together actually makes up almost 5%. It's like one of the largest weightings in our portfolio. And I was shocked to see it coming in at number 1. And it trades at a very high multiple today. I mean, the multiple is still expanding, but great returns. I mean, we're up 31% on this stock. So beautiful stuff. Meta coming in at number 2. And I'm shocked that it's not the number 1 position just from how much it's up as of recently. Makes me almost want to buy more of it when it dips again. But yeah, Meta comes in at the 2nd largest position and is also becoming a relatively expensive company. And this leads us into the 3rd stock that we are buying. I'm buying pretty aggressively here. Google. I think Google's the cheapest S&P top 10 company you can buy today. I'm very excited about buying it. I'm very comfortable buying it. So it makes up the current 3rd largest position, but it will move its way up to probably becoming the number 1 or 2 spot. I really see Meta and Google replacing Apple in the top, in the top 2 positions there. But putting Google aside, Microsoft actually comes in at number 4. And again, this is just from the market cap weighting in VOO. But intriguingly enough, just from market cap weighting with VDY, Royal Bank is actually our 5th largest position. And I like this a lot because Royal Bank's actually been outpacing a lot of the US tech companies, which is quite a shock for a Canadian bank to be doing as well as it's been doing. And I still think there's some favorable room for growth ahead of it. Finally, the number 6 stock, again, just because of the growth and performance, not that we held this for years or anything like that individually, just kind of happened because NVIDIA has been on an absolute tear, but this makes up the 6th largest position in our portfolio. All these 6 companies represent over 20%. It's probably closer to 23 to 25% of our combined portfolios. It represents 6 figures of value, and I couldn't sleep easier at night knowing these are our top holdings. These could easily take us to retirement, in our opinion. And though I think they're somewhat overvalued, the rest of the portfolio is in much more, recession-proof, I'm going to call recession-resilient stocks, which you can go check out in that course at kylelivingston.com. The only other thing I did this week was start buying Aduro, which I expected some extreme volatility, and I hope it drops a lot more. Aduro, I want to make it somewhere in the top 10 positioning going into next year. And I know it's a highly risky investment. A lot of people kind of get all up in arms, and I'm not telling you to buy Aduro. It's just a company that again, in the realm of small caps, I find intriguing. I've worked with them for years. It has a special place in my heart, and I really want to change the world. And you kind of want to vote with your money where you want to see the biggest change. And I like the people running the company. I like the people that I work with around the company. I like the where the company's going, revolutionizing the waste management industry. And it'll be something that I think is an outlier that nobody recognizes yet, which makes me feel like I'm getting a bit of a deal, presuming things come into fruition. But that comes with risk, right? And with risk, the higher the risk, the higher reward. So we'll see how all of this pans out. But yeah, I parked it in my TFSA, and I will continue to accumulate it alongside Google, but also not done buying my market cap weighted ETFs either. We will applaud VDY. It did give us a dividend this month, $185 to my account with the shares that I personally hold. So certainly can't complain there. But yeah, what a year. We haven't finished the year up yet. Obviously, when New Year's comes around, we'll have to do a full year recap because what a wild ride this has truly been. And I think most of us could have never expected the gains that we've seen. Considering just an odd year ago, I purchased a piece of real estate in Toronto to actually rebuilding this account back up to pretty insane levels. I mean, 340K might not be a lot to you. It might be a lot to you, but you're only fighting against yourself. Everyone's on a different timeline. And I hope me sharing my timeline with yours offers some inspiration, some insight, and some knowledge. Again, not as financial advice, but I'd love to know what you're doing in that comment section below.